Hi there, welcome to Kneppy Invest and welcome to June the 13th, 2024. We have about 1 hour left of trading today and it's been a good day. So finally we've had a good day, although resources, mining has had another bad day. So still a little bit of negativity in the mining sector and tech is up about 2%, which is not surprising because overnight NASDAQ was up 1.45% while the Dow Jones was actually down. So it again looks like it's technology stocks doing all the heavy lifting, raising the markets. And most of my American holdings are technological companies, and they had another good day overnight. So the agenda for today's video includes no tweets. In fact, I haven't even looked at Twitter today, but we'll have a look at the ASX today, have a look at the best performing sectors, indices, companies, also the worst performing of those as well. And then we'll have a look at top 5 announcements of the day. And I did have a few to choose from. So today, a little bit better than yesterday. I did have a few backup American listed companies, including Oracle, but I don't have to include Oracle. I might mention Oracle when we have, we'll go into the chart section of this particular video because the chart of Oracle looks pretty good. And a few other companies did not make it into the top 5 announcements. And I might just mention those companies fairly briefly towards the end of the video when we do look at charts. So let's get stuck into the video and have a look at the ASX today. A good day on the markets. XJO up 0.54%. And the best performing sectors, IT at the top, up 2.22%. Just behind IT, we have real estate, healthcare, discretionary, telecommunications, and utilities, all up by more than 1%. However, mining is down, energy down 0.38%, and materials down 0.4%. Gold's had an okay day, up 0.46%. But if your portfolio is heavily into mining companies, you might be thinking right now, what good day. I have not seen a good day at all. But those who have no investments in mining are probably thinking it's been the best day ever. Or maybe not. That's probably being a little bit overly dramatic. Now, let's have a look at the ASX 20. So we know energy down, materials down. So I'm going to have a guess how the 20 companies in the ASX 20 have performed today. A few energy companies and materials. So I am going to say 13 companies up, 7 down. And those companies down, I'll actually name as we get to it. So let's have a look. 15 up, 5 down. So based off those companies in the mining sector, and I have no idea what happened to iron ore. If iron ore is down, I would assume we have Rio Tinto, Fortescue, BHP, Woodside, Santos. So that's my guess as the 4 companies down. Maybe 4 of those companies are down, and maybe there's one other company that is also down. 15 companies up, and I'd say maybe WiseTech, REA Group are the best performing companies. So let's have a look. Let's have a look by percentage change. Those down, BHP, Woodside, Santos, Macquarie, there you go, and Rio Tinto. So the only company, mining company not down, is Fortescue. That's up a little bit. And Macquarie Group, and you could say, sneakily say, there is a bit of a tie in there between Macquarie Group and commodities because the best performing division of Macquarie Group, was it last year? I think it might have been last year, was their commodities section. So BHP down 0.69%. Might have a look at a chart for BHP. Haven't had a look at the chart for BHP for a while. Is it getting to an interesting level? I think interesting level for that company would be lower than $40. And the best performing companies, I've already mentioned, I think it might be WiseTech and REA Group, maybe Aristocrat. And Goodman Group, because real estate had a good day today as well. So let's have a look. REA Group, Goodman, WiseTech, and CSL and Wesfarmers, and Aristocrat not that far off the top as well. So if you are heavily invested in IT, you're probably thinking today, if we have more days like today, it would be a good thing, a great thing. Anyway, and funny enough, if you look at the 1-year performance of these companies, they've done really well. Goodman Group up 81%. Even NAB up 37.5%, Wesfarmers up 40.5%, CSL barely up, and I think that CSL's time to shine will be in the next 5 years. Sometime in the next 5 years, you are going to see, I think, a re-rating of CSL because it's been going sideways the last 4 years, and the company has grown, and I think it will continue to grow. And I think this is just a long-term consolidation period for CSL. So I think CSL will be a great investment for those who are willing to buy or hang on to their shares in the next 5 years. It's just my opinion. I could be completely wrong. Okay, so let's have a look at the best performing companies today. And at the top, we have LBT Innovations. What's happening here? So, funny enough, before I started recording this video, I went to the announcements here just to have a look at some of the announcements that were released since 10 a.m. And there wasn't many, but I noticed that LBT had a lift of pause in trading. I opened up this particular announcement and there was nothing in it. There's no substance in it. Just the pause in trading of the securities of this company have been lifted. And then suddenly the share price is up 61.54%. There's no news flow. I have no idea what's happening with LBT Innovations. I don't know why they were in a trading halt and that trading halt was lifted and there was no news flow. I just have no idea. I'm just going through the news of this company and there's nothing here at all. I have no idea. So for some reason, LBT Innovations has had a good day. They were in a trading halt. You can just go back to 9:58 a.m. LBT pause in trading, and there was no trading halt from the company. And then all of a sudden, the pause in trading was lifted at 12:47 p.m. And if you go to the trading of the company, if you go to the course of sales, when the trading was lifted, share price, there was a trade at 1.4 cents. So imagine you sold 7,000, was that 6,000? $6,200 worth of LBT shares at 1:55 p.m. at 1.4 cents. And then in the next few hours, the share price rallied 50%. Just imagine what you're feeling like. That's $3,000. So no idea what's happening with LBT Innovations. It could be nothing. Would I be interested in this? No. Now, just because I don't know what's happening doesn't mean there's no, maybe there was something in AFR. In fact, I could do that. LBT AFR, LBT Innovations AFR. Oh, I said it wrong. LBT, spelled it wrong. Anything here? Announcements from as long as 14 years ago. The last thing in the AFR about LBT Innovations was July 2020 in regards to a raising. So let's have a look at the chart for this company. And I would never even think about buying a company after a day like today. And if you have a look at the chart, they had a really good day on the 13th of March. Share price on that day rallied 100%. Share price since then has actually gone backwards. So it's fallen. So no interest in this company at all. And to be honest with you, the rally in the share price today is on absolutely low volume. I wouldn't be surprised if the share price drops 30% tomorrow. This could be just day traders getting excited about nothing. Anyway, so that's the top performing company so far today. We also have a few other companies I've never heard of here. Redcastle Resources, Pacific Nickel. I have heard of New Riser. Quickstep there. That is interesting. I'm going to put Quickstep down. They did release an announcement today, but the chart is absolutely terrible. And we also have Clio Diagnostics. I'm actually mentioning that company today. And Bubs Australia. Now, Bubs Australia announcement did make it into my top 5. Coming in at number 4, share price of this company is up 16.7%. So it looks like the market has appreciated that particular announcement. So let's have a look by market cap. Codan. What's happening with Codan? Is anything happening with Codan? I didn't see an announcement from this company. 6 to 6, nothing. Just a little bit of excitement in that company. Could be for many reasons. Could be just silly excitement. Kelly Partners, one of the most expensive companies on the ASX right now. No interest in that company. Peninsula Energy up a little bit. Metro Mining. Retail Food Group. There's Bubs. And I don't think Retail Food Group released anything. Big Tin Can, nice little rally after their horrible day yesterday. That's okay. You typically see that. Wouldn't be surprised to see Big Tin Can share price fall below 10 cents within the next week. So much negative sentiment within that company. And let's have a look at the worst performing companies today. And the worst performing companies, we have Australian Vintage, Pure Foods, Nothing on this particular list that I am interested in. Vection Technologies. I was going to do a video on Vection Technologies after their quarterly results. It's not on my agenda, but the share price of that company keeps on falling. So have a look at the chart for that company as well, just because I don't really follow that company all closely, but it's in an interesting space, but the share price keeps on falling. So the market doesn't like that company at all. And then LTR Pharma has had really good days in the last week and has had a negative day today, which is understandable. The one company I really am interested in is DXN. Has that gone down today? That's up again, another day up. I think eventually we're going to see some selling come in this business because the chart looks absolutely crazy for that company. It just keeps on going up every single day. So let's have a look at that chart. Keep looking at it, but yeah, it just keeps on. Yeah, I think eventually we're going to see a bit of a pause in the excitement in the company and a pullback. The price I'm looking for in the pullback would be about 50 cents or so. I wouldn't even be surprised if it pulls back a little bit more than that. And let's go have a look at the worst performing companies today by market cap. We have ASX. ASX did make it into my top 5 announcements of the day at number 2. Number 2, and you should not be surprised which company came in number 1, because I'd say the most significant news flow of the day was the company that did come in number 1. I wouldn't have been surprised to see this company or that company on the list as well. Brazilian Rare Earths, they did release something today. So have a look at that company. That company's been popping up onto my scanners because the chart. What else is here? Nothing else that I can see that is lighting a fuse in my mind, but that's okay. Okay, so let's have a look at the top 5 announcements of the day. I do have a few companies that I might want to discuss before we get to the top 5, and I'm just writing them down right now. So I might go through these companies fairly quickly. In fact, I have six down here, starting with Doc Anywhere or something like that. Doc Anywhere Group up 3% today. This company did release a guidance upgrade. So that's the main reason I was interested in this company. So whenever a company releases a guidance upgrade, I am going to be interested in that company. But just because they do issue an upgrade, and this company did that, I won't open up the announcement. It's an upgrade. So revenue upgrade looks like. The next thing I do is have a look at the chart. Is this a potential breakout? The whole reason I go through this process is I'm looking for potential breakouts, and I love breakouts on positive financial news. So is this a potential breakout? Possibly. Now, the share price is only at about a 2-month high, so not really there yet. If the share price wasn't higher than the current share price between January and March, I would be more excited potentially trading this, just potentially trading this company because of this particular announcement. So I think the end in the downtrend has come for this company. I think that's without doubt. So share price was in a fairly long-term downtrend, but the share price has been going sideways, in fact, since September 2022. So almost 2 years, share price has been going sideways. So this is getting close, very close to a breakout. So that's Doctor Anywhere. I don't know anything else about this company. I've not done any research on it. I'm assuming by the name, this is sort of a software, like some sort of app or something where you can talk to a doctor online or through the app or something like that. That's all I'm going to say right now. But I need to see some sort of reason for me to get interested. And an upgrade is the first step towards me getting interested in the company. The next step would be either looking at the chart or possibly even better, a positive financial result from the company, including the Appendix 4C. So they will release an Appendix 4C in the next month and a half. And this is the last Appendix 4C. A lot of receipts, over £10 million in receipts, but they were operating cash flow negative. So they might be getting very close to hitting that inflection point of becoming operating cash flow and free cash flow positive. And if they do achieve that in the current quarter, this could be an interesting company to have a gander or maybe even make a trade because the chart is starting to look better for Dr. Anywhere, Doctor Care Anywhere. Uh, Next on the list of companies that did not make it into my top 5, we have Wellnex Life, another company I know nothing about. Market's done nothing with this one. Trading update. So another trading update, a company I know nothing about. I'm assuming this is healthcare products that improve your life or something. Yeah, I'm just assuming by the name Wellnex, the healthcare something. Let's have a look. About section. Consumer healthcare business with a track record of developing, licensing, and marketing registered products. You don't have to put all that in. Listed in 2021. They don't mention what sort of products they sell here, so you have to delve a little bit deeper. Anyway, so let's have a look at Wellnex's. This is their trading update. It sounded positive. So monthly sales now of 2.2 million for the month of May. Sounds a fair bit. With gross margins of 40%. Sounds okay, doesn't it? For the period of January to May, gross margins were 40.1%. Gross profit increased from 2 million to 3.3 million year over year. Launch of medicinal cannabis brand. So maybe they're in that space of marijuana or medical marijuana, that sort of thing. Okay, so let's have a look at this company's most recent Appendix 4C, if they did release one. Here it is, 30th of April. Is this company on the precipice of becoming operating cash flow positive, or even just free cash flow positive even? Now let's have a look. Receipts, 3.1 million. And this company, oh, it is so close. Actually, I'd say, they have a GST refund, 350,000. Without that, they wouldn't have been operating cash flow positive. So this company is on that precipice, is on that point where it could be hitting that inflection point. Oh, they're so close just by looking at this. So I'm a little bit surprised there is not as much interest in this company based off this announcement and just based off the last Appendix 4C. So let's have a look at the chart. Maybe the chart will tell us a little bit more for Wellnex Life, a company I know nothing about. And the chart still looks pretty negative. They released something really negative, looks like, in December last year. 18th of December, what did they release? You have to go back, look at the year. 18th of December, they did an acquisition and a company update. Did they do a capital raising as well? Maybe. So they are doing acquisitions, but the chart since then, share price has been going sideways. So at this point in time, I'd be probably a little bit, wouldn't be following this company as closely maybe as the previous company, which was called Doctor Care Anywhere, mainly because of the chart. Chart for Doctor Care Anywhere looks a little bit better than Wellnex. And I'm not even sure if I have Wellnex on, it's in my Appendix 4C watch list and also health watch list. There you go. So even though it's into my watch list, I don't really pay attention or haven't paid attention to this company simply because financials there not yet have been met, not operating cash flow and free cash flow positive on a continuous basis, and the chart looks negative. We don't have both of those at this moment going for this company. What's the market cap? 33.5 million. Another company that did not quite make it into the top 5 is Suvo Strategic Minerals, down 7%. So the market hasn't liked this market update from the company. This company is a miner, a producing miner. I did not know that. And I don't think the market liked what they saw in this particular announcement from Suvo. Revised strategy and financial year 24 production and earnings guidance. I don't think this company would be operating cash flow positive or even profitable or anything like that. I'm just going to have a quick look at the company's most recent Appendix 4C, actually 5B, because it's a mining company. And we can have a look at their cash flow. So it had $3.1 million of revenue. That seems fairly small and still burning through cash. So receipts at 2.4 million, production costs 3.2 million. Okay, so let's have a look at the chart for Suvo Strategic SUV. It's easy to remember, huh? And the chart doesn't look horrible. The chart looks pretty good. And you can see a really good increase in volume in 2024, particularly when the share price was in a downtrend. Share price started to go sideways in May of last year, May, June. We started to see a pickup in volume when the share price started to go sideways. Went sideways for a long period, maybe 6 months or so, and started its uptrend back in February of this year. So in fact, the chart doesn't look that bad for Suvo Strategic. And I'm wondering if I have this company in any of my watch lists. I do not. This is one of the companies I do not have in my watch list. And I'm going to put it into one of my watch lists called Small Producing Miners. So that's a company that sort of discovered today, although they're not discovered. I've heard this company before, but the market hasn't liked this announcement. Maybe it's just general malaise in the mining sector right now that's caused this share price to drop. Anax, I'm going to have a little bit of a go at Anax. They went to a trading halt for a capital raising, right? Not a company I follow too closely, but I think they should have done this capital raising a little bit earlier. So the share price in the market loved this company for about a week back at the start of May. Share price went all the way to about 6.8 cents and almost halved. They should have done the capital raising when the share price got a little bit toppy up here back in sort of early mid-May. A lot of companies will do the capital raising when the share price has run like this, and they don't really wait. They do capital raising, and now they do capital raising as the share price has fallen, has almost halved. And I'd say this is going to be a discount, probably 20% discount. So I'd say they're doing the capital raising at 2.5 cents. If they did the capital raising at the start or mid-May, they could have done the capital raising at 4.5 cents or so, significantly higher than what they'll be doing. So this is just bad timing from the management of the company. They should have known when the share price rallied that this is a time to think about doing capital raising, and I think they just waited a little bit too long. And maybe one of the reasons the share price has pulled back for this company is the market was expecting a capital raising, and finally they received word of that. So that's Anax. Quickstep. So we'll have a look at the chart for this one, and one of the reasons I don't follow this company all too closely is the chart. I do think this company has potential, but they have to realize that potential. So development engineering business update, and you can see by the share price, this particular announcement has been treated well by the market. So a follow-on order. So they're calling this several significant new business developments. So following on the order of 20 Volanti aircraft valued at approximately $430,000 has been received. This is in addition to the 1.35 million 40-unit order. And some other stuff in here. So not big contracts or anything like that. Nothing massive. Probably my biggest problem with this company. So they are an aerospace composite business company. Is the margins seem to be really low. And that's about it. So I've been following this company for a long, long time. And the chart is horrendous. Quickstep. So even today, no interest in this company. Even though the share price has rallied 20%, the last time the share price was this high was 2 weeks ago. And the reason why is the share price is in a long-term downtrend. So 17.5 cents now. It's been a downtrend since February 2023. So it's on about 15 months. And even if you look at the weekly chart, I'd say it's been a downtrend for even longer than that. Well, based off the weekly chart, it's been a downtrend, well, for the last 15 years. There's been periods of time when it looked like the downtrend was coming to an end towards the end of 2019 into the start of 2020, just prior to COVID-19. So there is a chance that this company was coming out. Maybe they were making significant progress in the business, becoming profitable, and then COVID-19 destroyed them. There is a potential that happened to this company because the share price has continued going down. So unless I see some sort of shift in sentiment and the trend, the share price of this company, I don't care about these sort of contracts, these sort of announcements from the company. I need to see the company becoming profitable in operating cash flow and the trend and the sentiment in the company shifting to positive. The market cap of this company is only $12.55 million right now. Okay, so that's, in fact, let's have a look. FinChat. I'm just going to have a look at the history, the financial history of this company. So they've been around for a long time. I remember starting following this company maybe 10 years ago. So let's have a look at their revenue. So this is a beautiful increase in revenue. This is exactly what you want to see. I'm hoping they have gross margins here. Let's see if they have gross margins. I will not be surprised if gross margins have been dropping. Steadily dropping. Yeah, steadily dropping. Gross margins are fairly small, upwards of 20% prior to COVID-19. And since then, they've been slowly dropping. In fact, they've gone from 20% in 2019 down to 10% in the last 2 years. So that's probably the main concern here, is even though revenues have been uh, increasing, which is exactly what I want to see, gross margins have been dropping, which means the company is not profitable or is having trouble being profitable. So let's go back to the income statement. Let's have a look at profit. And the company, well, they were profitable 2019 and 20. Now they've been unprofitable the last 3 of the last 4 years. So just because a company's revenue does increase through time does not necessarily mean it's a good investment. So even though I do look at revenue first, you need to look at other stuff like gross margins, profit. And if I see gross margins dropping like Quickstep, that's probably a significant red flag. It's one of my red flags anyway. So that's Quickstep. And then Envirosuite. Okay, so I expect the share price to be a little bit higher because they issued an announcement, a response to media speculation, and it's a potential takeover bid. Now, and the share price went to a high of 6 cents. If I was a share of this company and management of the company were even entertaining the prospect of a takeover bid, I would be really peed off. The management should not even be thinking. They should be saying there was this takeover bid and we said, no, we are undervalued because if I was a shareholder, because the share price has never been lower for this company. So let's have a look at the weekly chart. Oh, I suppose it was briefly lower in 2018 and maybe all the way back to 2012, but it's a different company. So this is just like an opportunistic play. Share price is an all-time low. Why would you even be contemplating doing it or even accepting a takeover bid when the share price is an all-time low? It just doesn't, it boggles my mind. Yeah, anyway, so the company I do follow, and I just hope this company succeeds, but yeah, looks like the share price rallied yesterday. That would have been off the speculation probably, up 15%. Yeah, that would have been off the speculation. But if you look at the daily chart, even the daily chart looks horrendous, doesn't it? There was this little rally back in December, January of this last year and this year. Share price went from 5.5 cents to 9.5 cents. That was the time to get out. The rally was really weak, no volume coming in, and of course the rally failed fairly quickly. Okay, so that's some of the companies that did not make it into my top 5 announcements of the day. Let's have a look at the top 5, starting with MMA Offshore, which is MRM. Share price is up a little bit. Share price could have been up 10 to 15% because they issued another trading update. It was a positive trading update. And I'm no longer a shareholder of this company. I'd be furious of this company if I was still a shareholder. So this is a positive trading update. Earnings visibility and performance across the second half has continued to improve. And they go through that they've upgraded earnings guidance. So underlying EBITDA, underlying EBIT, which is pointless, absolutely pointless, because then they mention at the end of the bottom of the announcement, the directors of MMA Offshore continue to unanimously recommend that MMA Offshore shareholders vote in favour of the scheme of arrangement with Scion MMA Holdings. And I would say, if they didn't accept this particular takeover bid, the share price of MMA Offshore would be $3, $3.20, $3.30, $3.50 even. This is an absolutely ridiculous takeover bid, and the fact they unanimously think we should accept it or shareholders should accept it is ridiculous because they kept on issuing trading updates. They even said one of the reasons why we should accept this particular takeover bid is because the good times will eventually come to an end. Now is not the time to sell. The time to sell this company is when the good times do come to an end. But the good times are still rolling on. This company could be double the size it is right now in a few years because who knows how long those good times are going to roll on. So I would be absolutely pissed off with the company's management if I was a shareholder right now, particularly long-term shareholder. So that's coming in on 5. We have MA Offshore. Release a positive trading update, but it's pointless because the management have given up. And that's probably the best way to say it. They've just given up. Take the money and run. Given up. Horrible management. Coming in number 4, we have Bubs. Bubs Australia released a sort of a trading update. My favorite type of announcement is a trading update. Would I be interested in Bubs right now? No. This is a trading update, and I'm very enthusiastic about most trading updates. Well, I shouldn't say that. If it's a positive trading update, I get enthusiastic. Now, this is all about their USA expansion and how they're performing, and they are performing well. So USA weekly scan revenue exceeds $1 million per week. Sounds pretty good. Number 1 best-selling infant formula product on Amazon USA in May 2024. Sounds pretty good. But what's their margins? Who knows? So I don't care about revenue. I care about margins. In this case, don't care about revenue. I care about margins and how much profit they're getting from selling all these tins in the United States. If they are not generating any cash flow or any profit, it's pointless at this point in time. You need to become profitable eventually. And that has been Bub's biggest problem for a while. They are not profitable. And there's no mention of profitability or cash flow right now. So maybe the management doesn't care about that. They just want to expand and spending all this money on just expanding in USA. But who knows how successful it's going to be. It looks okay right now. And the reason I'm not complaining, but I'm having a bit of a go, is if you go back to the last quarterly report, let's have a look at the cash flow. So almost $20 million in receipts, but just their product manufacturing operating costs were more than the receipts. So that's absolutely ridiculous. And they burned through $10.9 million of cash in this particular quarter. Now, you could say that they are building their inventory. That's why they're spending so much money on product manufacturing and operating costs. That is a possibility, but we need to see, because if you look the year to date, $51 million receipts, cash burn, or operating cash flow negative by $23.4 million. So I'm yet to get excited about Bubs just yet because they're still burning through a lot of cash. Now, this sort of announcement makes them seem like they are on the right trajectory, but they still have to prove that this trajectory will lead to profitability and cash flow. So I'm not yet excited with Bubs and this sort of announcement. And you can see that just by the chart. The market is still not interested in this company. Share price is still in a downtrend. Yes, even though the share price has rallied 17%, it's still in a downtrend because it was only 2 weeks ago. Share price was this level. So share price in a downtrend. This could be sort of the first sign, the first step towards share price consolidating. And even the volume today wasn't that great. So share price is still in a downtrend, but possibly the end of the downtrend. But we need to see proof the downtrend has come to an end for Bubs. But it was a good enough announcement that it has come in at number 4 in today's top 5 announcements of the day. Coming in at number 3, a company I've mentioned a few times. Oh, it's down now. Race Oncology. Share price got as high as $2.04 today. So it's been a little bit of selling, which might be good for those who like the chart. So this is more of a chart. I noticed this company just based off the chart. And they did release an announcement a few days ago, a USA FDA orphan drug designation, and then bisoprolol highly effective in multiple myeloma mouse model. So initially the market loved that. And one of the reasons the market loved that, it came 2 days after the last positive announcement. So the market is thinking this company is starting to release these positive announcements on an ongoing basis. So maybe there is an expectation of more positive announcements in the future. That's how the market works. I didn't even open up that particular announcement because more than likely I wouldn't understand a lot of what they're saying. So I said, let's open it up. And there's no financial numbers. There's no numbers in there. So this is just, I wouldn't say a feel-good story, but it's not the sort of announcement that is, what's the best way to say it? It's not the sort of announcement that will significantly shift sentiment in the company. Now, sentiment in the company is actually positive right now, but it's not going to expand that sentiment. It's not going to significantly increase that positive sentiment because it's not a financially driven announcement, put it that way. So bisoprene kills human multiple myeloma cells at clinically relevant drug concentrations in both cell culture and mice. But because who knows what this is going to lead to, we just don't know. So let's have a look at the chart. And this is the one reason this company made it onto the top 5 announcements of the day. And I actually did expect the share price to be a little bit higher, by the way. So the chart, it's just a chart. There's definitely has been a shift in sentiment in this company in the past few months. It's now positive, and the share price right now, at the high today, the share price was at a year high. So this is a company that is moving in the right direction. Chart is moving in the right direction. Sentiment has turned positive, so things are moving in the right direction, and some good volume coming in as well. So definitely a company. This is a company I have put onto my watch list. Pretty sure it's now in my watch list. Yes, there it is. And that's mainly because of the chart. So it's coming in number 3. What was it? Okay, coming in number 3, we have Race Technology. No, Oncology. I'm pretty sure I called this company Race Technology the other day. Race Oncology. Coming in at number 2, we have ASX. We already know the share price is down a lot. This company released an investor forum market release, some presentation slides, and speaker notes. Okay. Now, when I opened up their market release, I was a little bit confused. I think it was this one. Yes. Because all they were talking about was expenses, how much they're going to spend. That's all. In fact, they're significantly increasing their spending in the next year to upgrade or something. I think it was a presentation. Yeah, and I was like, well, okay, that's okay. They also talked about listings, and I'm interested in what they're going to do. They're calling it cyclical, so I might go to that as well. Let's have a look for it. So here we go. Here it is. So this is their expenses for financial year 24 and 25. It's growing from financial year 23 to 24 to 25. So expenses are expanding. And that seems all there. Here it is, capital expenditure, significant increase in capital expenditure for this year and next year. And they talk about why, driven by technology modernization programs. So by reading that, their technology is not modernized. I boggle my mind, why not? Capital management, dividend per share decreased. That's not a good look. Return equity has been decreasing down to 12.6% in the last half year. 10-minute break. I'm not going to do that to you. So why should companies list on the ASX? Because it has world's 5th largest pension system. Okay. Half the cost of the US. Okay. And just talking about to the ASX compared to some other, here we go. IPO activity. This is probably the slide that interests me the most, because we do know there has been a dearth of IPOs recently, and it has not been this bad for 15 years. Last time it was this bad was during the GFC, which makes sense. But we are not in the GFC, are we? The market's doing okay. So why are companies not wanting to IPO? So they're calling it cyclical. And this is happening globally. And look at that. During 2021, there was a massive amount of IPOs. Just prior to the GFC, a massive amount of IPOs as well. So companies tend to want to IPO when the market's doing really well. The market's not doing bad now, is it? So why? There must be another reason why companies aren't IPOing now. Could it just be the private equity is okay, it's good enough for companies not to go public? I just don't know. And I would be more concerned if I was the ASX, then I think they're thinking or portraying right here, sort of blaming it on the cycle. I don't necessarily think it's completely cyclical. Anyway, ASX, and the market hasn't liked it. I'm not the biggest fan of this company. They do have a moat. Well, that's the wrong company. If ASX chart looks like this, I'd be all in. So what's this? ACE Technology. Market cap 21.3 billion. Just imagine that. It's semiconductors, that's probably why. I'm going to put this into my USA watch list. I've never heard of this company, but the chart looks beautiful. This could be just a mistake. So let's go to ASX Limited. There's a massive drop in the share price today. Share price was lower back between September and November last year. If you look at the weekly chart, yeah, the weekly chart going back from 2009 all the way through to 2022 looked really good, but weak since then. And in fact, I think the downtrend or the uptrend in ASX has come to an end. And I, I would argue this company has really disappointed the last few years because they have a moat. And there was all that thing about upgrading their, what was it? I forget exactly. They were going to do blockchain and that sort of thing and upgrade all their systems, and that all failed. And the market just doesn't care, doesn't have a high regard for this company right now. And it seems like this particular announcement has sort of exacerbated the lack of positive sentiment in ASX right now. So I haven't really gone through this these presentations, but there wasn't anything in it that I really saw that triggered anything good within me as an investor. Okay, so coming in number 2, we have ASX. Coming in number 1 should be fairly obvious is if you've been following it. That's Sigma Healthcare and Chemist Warehouse. So share price not as down as much as I thought it might have been. Only down 4.4%. It was down by almost 10% on open, which is understandable. So they were getting the announcement from the ACCC or ACCC about the merger between Sigma and Chemist Warehouse. And just the title of the announcement, Sigma Chemist Warehouse merger raises competition concerns. Now, that does not mean that this merger has come to an end. But this is the concern that I would have, and I think some people in the market do have, that there could be decreasing competition. This could be leading to decreasing competition. Decreasing competition leads to higher prices for consumers. They also mentioned somewhere in here, the ACCC has heard many concerns about the impact Chemist Warehouse has had on the pharmacy sector. However, the ACCC is only focused on the impacts of the acquisition on competition. Yes, on competition, rather than the pros and cons of different business models. The key issue is whether or not the proposed acquisition weakens competition in the supply of pharmaceutical products. The ACCC is also concerned that the proposed acquisition may harm pharmacies currently supplied by Sigma, leading to a substantial lessening of competition in pharmacy retailing. Okay, interesting enough, Sigma came out with their own announcement acknowledging the ACCC. In fact, they actually said this was not a surprise. Maybe they didn't say this was a surprise. They said the release of today of the statement of issues is not unexpected for a proposed transaction of this complexity, and is consistent with the ACCC's stated timeline. So it doesn't mean that this merger won't go ahead, but I do think there are concerns out there, and just the risk that this merger doesn't go through. I thought there might have been more of a sell-off, but I also thought and wondering, why is the market putting such a premium on the share price of this company? Because if this merger is nixed by the ACCC, the share price of Sigma Healthcare will drop back down to about 60 cents. Share price now $1.15. So there is a significant risk and a significant destruction of capital if this merger doesn't go through. I can understand why the share price was dropped down to about 90 cents back in January. And with the share price rising, leading up to this announcement, going back to $1.30, I thought the market was probably convinced the ACCC wouldn't have any issues, which I didn't understand. And the 2 days leading up to this particular day, today's announcement, the share price rallied on both days. So the share price ran up, well, not as much as I thought it would. It rolled, I suppose it's not as much. It looked, the 1 day candlesticks look better than the actual share price rise. And in fact, the share price has rallied today. So the market is not that concerned about this particular announcement. So that's interesting in itself. So that's the announcement of the day. Sigma Healthcare and Chemist Warehouse. No idea whether this merger will go through in the end. And I'm not even sure why Chemist Warehouse just didn't IPO on the ASX. That's probably what they should have done. And there's a reason why they want to merge with Sigma Healthcare. And I say, me being cynical, one of the reasons why they wanted to merge with Sigma Healthcare is to decrease competition. And that's what the ACCC has to look at, which is a fine enough reason to merge. That's a really good reason to merge, is to decrease competition. Okay, so let's have a look at some charts as we end this video. I was going to say, let's have a look at BHP. because is the share price of BHP getting interesting levels? Not quite. So I was thinking $40, but yeah. In fact, what I'm going to do is I'm going to put a triangle. So it's sort of in this level where we do get some nice support for BHP, even below that. In fact, I'm going to lower it a little bit. There. That sort of support zone. Support zone is actually fairly big for this company. It's been like that for the last 2 years, and share price is a little bit above that. So longer term, I wouldn't argue about people having BHP in their portfolio for the long term. But I think over the long term, the share price and the valuation of this company probably will increase. And what else? VR1, Vection Technologies. The chart is just horrendous, isn't it? In fact, the share price today, down 13.6%, is at an all-time low. I'm pretty sure this company released they were operating cash flow positive the last quarter. And one of the reasons I decided not to do a video on this company, was definitely going to do a video, was just the chart looks so weak. I went, what's the point of doing a video? Chart looks really weak. Share price could fall even more, and the share price has fallen. So I'm pretty sure they must have been operating cash flow positive this quarter. Let's have a look. Yeah, they were. They were operating cash flow positive by 4.1 million. That really intrigued me because they have been operating cash flow negative by such large amounts the last few quarters. So I was thinking, is this the turning point for the company? And then I thought, maybe just wait. The market's not convinced. I'm not convinced. Share price is still in a downtrend and has continued to fall since then. So I was going to wait. And I'm looking forward to reading this company's Appendix 4C for the June quarter, which they will release in the next month and a half. And Brazilian Energy, or Brazilian Rare Earths, I think. Brazilian Rare Earths, share price has been an uptrend, and share price has fallen today. I'm pretty sure they might have released some news. Or was that yesterday they released something? Not today. Oh, they did a placement, of course. Yeah, trading halt for a capital raising, raised $80 million. What price did they raise capital at? Let's have a look. $3.30. Share price is now below $3.30. Share price has moved down towards the short-term moving average channel. So maybe now is a good time to think about buying some shares in Brazilian Rare Earths. They've done a capital raising. Share prices dipped back below the capital raising price. So if this is the sort of chart you like, the sort of company you might like, maybe this is a trade for you. That's all I got for today's video. If you have any thoughts, any questions, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.